The economy just handed us a lot to talk about. Welcome to RealPage Economy Express. Let's start with the jobs report because it sets the tone for everything we're watching right now. February non-farm payrolls fell by 92,000, an outright decline that caught most of us off guard. Healthcare shed 28,000 positions due to a strike, and federal government lost another 10,000 jobs. The unemployment rate held at 4.4%, but long-term unemployment is climbing, with average duration now at 25.7 weeks, the longest since December 2021. Average hourly earnings are still up 3.8% year over year, but revisions turned December into an outright loss, meaning 3 of the last 5 months now show payroll declines. Turning to weekly claims, the week ending March 7 came in at 213,000 seasonally adjusted, essentially flat on the week, with a 4-week average at 212,000. Layoffs are not spiking, but hiring has clearly pulled back. So what does that all mean for inflation? Well, February CPI rose 30 basis points of the month and came in at 2.4% year over year, matching January. Core inflation was up 2.5% annually, the closest we've been to the Fed's 2% target in a while. Shelter is still the stickiest piece, but showing signs of easing. Onto the producer side, January PPI final demand rose 50 basis points for the month and 2.9% over the year, with services up 80 basis points and goods down 30 basis points on falling gasoline prices. Core PPI has now risen 9 consecutive months, so upstream pressures have not gone away entirely. The Fed has plenty to think about here. Shifting to trade, the January deficit narrowed to $54.5 billion. Export jumped $15.8 billion, while imports edged lower. Year over year, the deficit is running 57% below January 2025. Now to housing, where the story is a lot more encouraging. January permits were down 5.4% from December, and starts rebounded sharply, up 7.2% of the month and 9.5% above a year ago. Completions moved higher as well. Now, existing home sales in February rose 1.7% to a little over 4 million annualized, with affordability at its best level since March 2022, as the 30-year fixed rate dropped to a little over 6%, nearly full point below a year ago. And rounding it out, mortgage applications for the week ending March increased 3.2%, with purchase applications up 7.8% on the week and 11% above a year ago levels. Now, spring is here, and the housing market definitely knows it. So, jobs weakening, inflation cooling, trade improving, and housing picking up. A lot moving at once. Thanks for watching RealPage Economy Express.